Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Mark Sebastian, Chief Operating Officer of Option Pit, to discuss trends in the Nasdaq 100. Of course, we'll touch on VOLQ, which is the Nasdaq 100 Volatility Index. We'll also talk about some trades to trade the trend. Mark, it's great to see you as always. Welcome back to Trade Talks. And it really has been a volatility trader's dream. You finally got what you were looking for at the end of September into October, living up to their months of being historically volatile.
Yeah, we finally saw a real pattern break. Leading in September expiration, we'd always seen the 50-day moving average tested in both the S&P and the Nasdaq 100, and then bounced. This time it didn't. We broke that 50-day moving average and have held below the 50-day moving average. We're now, as we're recording this, 10 days in a row below the 50-day moving average for the S&P 500, and we are 10 days below the 50-day moving average for the QQQ as well. So this has been a total change in trend from everything we'd seen leading up to September expiration. So I'm really interested and excited about what this week is going to bring us.
And Mark, if we take a look at VOLQ specifically, the Nasdaq Volatility Index, is there anything that you're seeing there that could suggest further chop, or do you think we could have troughed here? What are you taking a look there?
Yeah, well, it's coming in at a little over 20, which shows that there's still some interpretation that we could continue to see volatility relatively high. It is not trading at a very big spread to the Nasdaq 100 Volatility Index. The CBOE puts out the VXN, which tells me that we're seeing a big push at the money, and some of the outside curvature, some of the out of the money puts and calls are starting to see a little bit of pressure as we've broken out of this trend. So what that would mean is traders are buying at the money options and selling out of the money options, which is the opposite of the trend that we had seen the prior 6 months.
Right. Well, it'll also be interesting to see, because now we're coming into earnings season. When we were in September, we're kind of always in that trough of the news cycle, with the exception of macro. So there's not as much for stocks to react to, with a couple of outliers such as Apple and his Facebook. Mm-hmm. So when you think about going into earnings season, what are some trades that you can put on? I mean, we know we could do VOLQ, the futures, but let's say you're more of a retail trader. You're looking at the Qs, you're looking at the NDX, which of course are Nasdaq 100 index options. What are some trades you can put on as we get into earnings?
Yeah, well, as we head into earnings, there are the big names: Apple, Amazon, Google, Microsoft, and Facebook, and Tesla make up a huge portion of that Nasdaq 100, about half of the index. So what we can do is look through, see if there's any earnings plays that are maybe too cheap, and then hedge off some of that risk, some of that volatility risk in the QQQ itself. I would argue that this is the first time going into one of those earnings seasons that really sentiment stinks. So heading into this earnings, I'm excited to see whether sentiment is bad enough and whether this pullback is strong enough that good earnings can actually be good earnings, and we see some of these big names actually get a pop on what is expected to be a relatively strong quarter.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.